Sachin Tikekar joined just now, Joint Managing Director with KPIT. The numbers were strong, and what they are guiding for, let's understand that they are maintaining a 27 to 30% at the upper end of the guidance band, and that implies a CAGR growth of 27 to 30%. So, Sachin, good morning. Thank you for joining us. FY24 revenue guidance maintained at 27 to 30%, and that at the upper guidance implies a 2.3% CAGR growth over last 3 quarters. Now, some would say that while the big picture in terms of the full year is intact, there seems to be a little bit of trim down in the next 2 quarters if I purely look at the maths here.
So first of all, thanks for having me. We are very happy with the way things have turned out in Q1. They are in full in line with our expectations. And at the beginning of the year, we had said that we have strong visibility towards the first half of the year. And it looks like we are in line to have a really strong first quarter as well as the first half of the year. What we typically do as a policy, and we have done this for several years, is if there is going to be any kind of change in the guidance, that's something that we'll do only at the end of Q3. So what I can say at this point in time is things are turning out to be in line with our expectations, and we remain bullish on the business. And if there are any changes, we are going to come back and talk about those changes end of Q3.
Going through a massive structural change. There is AI, there is a crunch in terms of what the big companies are going through. What would be the implications for your business, since you are in the business of design, you're also in the business of servicing very different type of clients, which the IT industry does per se. The impact of AI on your business?
Let's look at it in 2 ways. Impact on our business from our client perspective. In the immediate future, we don't see much of an impact. In fact, it will help us. Some of the AI thing that we've been doing with our clients for years now. So as an example, in autonomous driving, there is tremendous amount of machine learning and AI that we've been using to make autonomous driving, especially the testing and validation, far more effective and efficient. So this is something that is not new to us. And those are the areas where we'll continue to work with our clients and help them, get to the production program faster. That's something that we'll continue to do. Other than that, we don't see an immediate business impact with our clients. In terms of how we look at AI internally, that's something that we are trying to focus on. I think there are some efficiencies that can be built, especially in content creation, as well as in our recruitment campaigns and so forth. So from our perspective, this is really our take on AI in the immediate future.
I just want to get into the specifics, Sachin, of the guidance that you mentioned. Your margins, as I see it, have seen a significant improvement in the first quarter. What, apart from revenue growth, led to this? And are you then confident about a 19 to 20% margin guidance for the full year?
Yes. First of all, we want to reinforce that we are very confident about not only meeting the top line guidance, but also the EBITDA guidance that we've provided. And it's very helpful to have a strong Q1 from that perspective. The growth, the margin improvement is on the back of 2 things. One is the quality of engagements, and secondly, we have also created some more efficiency where we had actually recruited people well in advance, and we were able to sort of put them on different programs and so forth. So that has helped us to not only grow the revenues but also improvement in profitability. And as far as the rest of the year is concerned, we believe that we are in a strong position to be between 19 and 20%.
The other thing I also wanted to talk about was the FMS integration, because from what one understands, Q1 was also boosted by that. Could you break it up, organic as well as inorganic growth, and how the acquisition is scaled up for you?
It's difficult to break it up because FMS is something that has been part of our business for last year and a half. And the work that we have been doing has been sort of together. It's just that the full acquisition happened during the course of this quarter. So it's kind of difficult to break up, how much impact that has had. What I can say is the integration is going really well. It was there are two areas. One is one of our strategic clients where FMS had a really good footprint, and that has sort of helped us to accelerate our journey with that particular OEM in Europe. And secondly, there are certain things related to autonomous driving that are also complementary to our business. So far, the acquisition is going well. The integration is also well on track.
What about overall client conversation? How have they panned out in the last 4 weeks? Is it getting better or worse?
You said client conversations, right?
Yes.
Yes, of course. We continue to work with handful of OEMs across the three geographies, Americas, Europe, and Asia. The client conversations are, from our perspective, are all about they want to get to what you will call a case through software-defined vehicles or software-defined mobility. And the conversations is what is the most effective and efficient way to get there without compromising any safety or so those are the conversations that we continue to have. And from that perspective, they've been very engaging and enriching for us. Given their software spend continues to grow, especially in this area, we have not seen any kind of we are not getting any kind of sort of messages from any of our clients that things are likely to slow down from the software perspective.
Sachin, really appreciate your time and so glad you could join us.